Okay, so let's quickly touch on this financing cycle. We've talked about clients reporting on their investing activities, but that's a bit different from financing activities. Okay, so financing activities specifically relate to the client either raising debt or equity. And I could see how this sounds a little bit confusing, but raising debt or equity is talking more specifically about cash inflow, either from borrowing money or issuing common stock, right? So this could be other types of equity as well. So anything finance related, you're thinking raising debt or equity. Okay, so financing, you're thinking of a startup company that's looking to finance its new venture. They're generally going to either finance this by either raising debt, right, borrowing money, or finding investors to give them money for their brilliant new mobile app idea. Okay, so that's specifically what we're auditing now. Okay, so when we are auditing a client's financing activities, we must first test internal controls related to this cycle. Okay, so testing internal controls related to financing activities will consist of the auditor most likely performing things like assessing the documentation, right? So when it comes to financing activities, there's going to be a ton of documentation that can be assessed for testing internal controls, as well as for performing substantive test of details, right? Typically, you could find loan agreements, investor agreements, all kinds of agreements with a ton of details that we could test. Okay, so ensuring that the documentation exists will help the auditor understand whether or not internal controls are adequate as it pertains to financing activities. Okay, the auditor can also assess internal controls over interest payments, right? Money being borrowed, you bet that this is going to include interest associated with that principal debt. And finally, understanding internal controls over debt financing authorization, right? Who's authorizing this loan agreement? Who decides who gets to borrow this money, right? So authorization is going to be a key function when it comes to debt as well as equity financing. Okay, so once we understand internal controls and we've adequately tested for them, we could subsequently perform substantive test of details, right? So what type of documentation will we be looking at when we are obtaining audit evidence related to debt or equity financing? So the auditor is going to have a field day here because there's all kinds of documentation that they can take a look at. So once again, with auditing debt transactions, okay, so transaction level assertions, once again, we're going to fire this off with the completeness assertion. So what sort of documentation will the auditor be looking at here? Well, when it comes to debt agreements, we have to understand that these have been authorized by the client, right? So this could be authorized by the client's board of directors. And we're going to take a look at things like the board minutes, right? So minutes from board meetings are going to be transcriptions from board meetings, which is basically going to illustrate everything that has been said, right? So if we are examining those debt agreements, right, those contracts, and we're comparing those to board minutes, it's probably going to provide us enough evidence for debt associated transactions. We can also take a look at those debt listings, right? So these are generally going to be the financial report associated with debt. Okay, so comparing those debt agreements with associated interest expense items related to that debt should be used when comparing to that listing. Okay, so cutoff tests. We are making sure that all of this debt is in the correct time period. So the auditor is going to review any sort of debt activity shortly before and after the end of the period to ensure that debt was reported in the correct year, right? We don't want to see any debt being included in the following year that should have been included in the current year, right? We also don't want to see any cash inflow coming in at the end of the year when that cash inflow is actually received at the beginning of the next year. Valuation, allocation, and accuracy. So the auditor is going to make sure that items related to the income statement correspond with properly associated and properly valued source documentation. Okay, so what typically would we see associated with items that would be reported on the income statement associated with debt? So that's going to be interest, right? So interest expenses are typically going to be associated with borrowing money, right? If the client is raising cash through debt financing, then typically they're going to see interest expenses associated with paying back that principal. So taking a look at some debt receipts and payments, we're going to compare those to debt balances for reasonableness, right? This is going to ensure that the proper value is recorded. So the next test is going to be testing for existence, right? Existence related to these income statement items. We're going to look at debt listings and examine the board minutes to ensure that what is being recorded is properly authorized, right? It's based on actual source documentation. Finally, understandability and classification. So we're going to be taking a look at the dates here. So we're going to be examining debt agreements and we're going to be looking at the dates to ensure that they are properly recorded, right? We want to make sure that short-term debt is classified as short-term, whereas long-term debt is classified as long-term, right? We want to make sure it's understandable and classified appropriately. Now let's take a look at some debt balances, right? So some account balance level assertions associated with debt, and then we'll move on into equity. So when it comes to testing for completeness related to debt financing agreements, the auditor could take a look at the board minutes again, right? We're going to assess any new debt offerings And we're going to make sure that those debt agreements are properly associated from minutes, right? We're going to be tracing from the board minutes, right? Those transcripts that will be printed out about the conversations during that meeting. Tracing that source documentation all the way to the financial report is going to test for completeness related to that debt balance. Valuation, allocation, and accuracy. Okay, so the auditor is going to take a look at the valuation of debt agreements, right? We're going to be taking a look, examining those debt agreements, and ensuring that the amount that is being reported is the correct amount that has been borrowed. Existence, right? So we're going to do some confirmations. So sending out confirmations to creditors will generally ensure that any sort of bonds or notes actually exist. Rights and obligations, we want to make sure that debt is actually going to belong or is the obligation of the client, right? So examining bond agreements, we're going to be making sure that we are obtaining evidence that this is actually an obligation of the client. Okay, so two sides to financing, right? We have debt and equity. So now let's talk about equity transactions and equity balances. Okay, so when it comes to completeness, the auditor should send out third-party confirmations to the stock transfer agent, right? So this is going to provide the auditor with evidence that reported stock balances represent the stock that has been properly authorized, that has been properly issued, and is still outstanding. When it comes to valuation, the auditor should analyze retained earnings accounts and verify that entries associated with those account balances are properly reflected in the client's statement of stockholders' equity. Existence and occurrence, okay, so the auditor should vouch common stock authorizations during the current period, all the way to minutes that have been transcribed from those board meetings. Finally, understandability and classification. So here the auditor is just going to want to obtain an understanding about restrictions and appropriations that have been disclosed in the client's financial statements. Okay, so finally, equity balances, all right? So once again, we said that there are two sides to this financing activities section, okay? So we can also be issuing this equity. So when talking about completeness, what the auditor is going to do is examine stock certificates. So this is similar to the equivalent of a pay stub. So that stock certificate is going to properly be recorded and traced all the way to the stock certificate book, right? Think of the stock certificate book as the financial report or the listing of all of these stock transactions. Furthermore, the auditor should ensure that proper recording of any canceled certificates and any additional unused certificates exist. When it comes to valuation, the auditor should recompute the valuation that has been recorded for stock transactions during the period under audit. When it comes to existence, the auditor is going to examine recorded stock certificates in the stock certificate book to verify that the existence of reported amounts is actually there. Understandability and classification. So the auditor just wants to obtain this understanding, right? So they are going to take a look at documented loan agreements, investor agreements, all other types of operating agreements to ensure that the client has reported information that is understandable and it is all related to information that is classified appropriately. Okay, I know, miserable, but we did it. So let's take a look at a couple multiple choice questions to really hone in on this.